Hello everyone, Dividend Enjoyer here, and today I'm going to be talking about the two stocks that I bought today with the markets going down. This was on news of Walmart reporting that they were going to have weaker than expected earnings and just lowering their guidance overall. And it seems like a lot of really just short-term fears also about the tariffs, which I think are actually probably a legitimate concern for Wall Street. But overall, I think that the market moving down in this case was more just panic, not very rational if you're a long-term investor. So the two stocks that I really heavily invested in, I guess today, I only put in $500, but that's still a lot of money. I bought one share of American Express because it dipped below $300, and I really love this company, and I've been waiting for a moment to get in at a cheaper price, but I couldn't justify anything above $300. So I thought that today would be the perfect opportunity to increase my position. And the reason that I like American Express so much is that they essentially benefit. It's a very easy business model to understand. They benefit from people spending more money. So as more people enter their ecosystem, they spend more money, there's more transactions, they make more. But that's not the only part of American Express that makes it an amazing business that a lot of people aren't talking about. American Express has significant network effects. So as people are spending more money with the cards or our card holders just in general, then they're able to improve the products and services that they offer, which causes them to grow more, which causes more people to want to get into American Express that otherwise wouldn't have. And when more people are getting into American Express that otherwise wouldn't have, then the cycle repeats itself. So they get more money, they improve the product, more people come, and then as more people come, the product improves and even more people want to have American Express cards. So I think that this is just a very solid business. I don't think it's going anywhere. I think people are very satisfied with the product. I also think that they're doing great steps to get into the millennial and Gen Z demographic, even though they don't spend as much. And overall, I just really think that this is one of those companies that's an amazing company, but usually trades at a premium. I can justify buying this at a premium because I think it's just going to continue to grow and grow over time organically. And I think that they're going to continue to look for ways to grow even more. But it's such a simple and straightforward and wonderful business that can just generate, significant cash flows, has a very reliable, safe dividend, and just keeps increasing the amount of money that they're making over time, whether that's because they're partnered with other businesses and as those businesses grow, they have more transactions, or just more transactions in general, or just growing their user base. I think that this is a great company and I wanted to own it. In the long term, I don't think that this drop in the market is really going to affect American Express. I think that it could affect a couple of quarters. My whole portfolio really got hit really hard, but I don't see this as a loss. I actually prefer to see my stocks go down because I'm a lifelong buyer of stocks and I really wanted to add more American Express to my portfolio. And that was kind of the primary thing that I added. But then the secondary thing that I wanted to add more of was actually Energy Transfer, ticker symbol ET. And I did a whole video pretty recently on Energy Transfer, but the remaining amount, around 200, I put into there, and I've just received my $106 in dividends from my Webull account and around $15 in my Chase account. But now with this new money going in, I'd also put some more money into Energy Transfer previously. Now I have about $1,500 in Energy Transfer in my Chase account, along with around, I believe, $6,000 in my Webull account, but, it's around there. And my reasoning for this is that I think global energy demand is going to increase with AI training and all the data centers that are being built. And I think that the demand for energy is going to be very stable and reliable. And when I actually modeled this company based off of my, future cash flow growth projections, a growth rate of 0% yielded an upside of over 11%. So I think that this is just an excellent company right now. And I think that while it's undervalued, you need to be getting in. And ironically, Vici, my biggest holding in my Chase account, is above my price target, so I didn't add any of that. But those are kind of the two stocks that I added. I would have liked to have had more money so that I could also put some into Salesforce as well, because I think that Salesforce is probably undervalued currently. But I have a pretty significant position in it, and I think it's pretty risky compared to those two stocks, and I like to play safer. I don't like to have too many risky things in my portfolio because I want to play as safe as possible just to kind of mitigate any risks and any downsides. And I think that Salesforce will materialize into a really amazing company, but it is pretty risky. And, I do have time. I do have a lot of time for my portfolio to grow, and I don't want to sell anything. And I really like what I'm seeing in the market because the stocks aren't going down because of anything that I think is going to cause a significant long-term downtrend or changes my outlook because my time horizon's so long. And that's something you have to consider when you're investing. For me, I don't need the money now. I invest the extra money that I have, and I keep a pretty large cash position as well so that I'm safe from any downsides, and I don't have to sell out of my investments at any given time, because the only time I really want to sell is when my investments have gone up a substantial amount and I want to put that money into something else that can earn me more money that I think is either better or just safer in general. So I'm not a seller at all in this market. I think that it's very short term. I think that valuations are pretty high overall, but I think that if you're going to hold something for the next 5 years, you're probably in pretty good shape. Obviously, we could have a 2008 type of situation or something like that. But if that happens, I'll just be buying more stock because I'm going to have my own method of valuing it, which I do on my channel. I'm going to break it down with a DCF analysis, find a fair value that I think is good, and I'm going to buy based off of that. And if the market's offering me something at a substantial discount, I'm going to buy it up. And that's what I did with American Express, because even if it's at a premium, I'm comfortable buying a share of American Express at $300 or below. And it had been at $331 at one point. I didn't sell any. I don't regret not selling any. But now that it was below $300, I was very happy to buy it because I think in the long term, this stock's going to perform very well. I think that Energy Transfer is going to perform very well and pay me a really high dividend, because when I'm ready to actually collect my Energy Transfer dividend and either live off of that dividend income or just have it as an extra supplemental thing to boost my lifestyle, I think that that's going to be very positive. And I think that in the future, if Energy Transfer ever gets to the point where I really think it's overvalued, which always could be possible, because I think that the hype for Energy Transfer is going to start at some point and it's going to become a very overvalued stock. It has such a high dividend yield that I'll just be able to collect that money in cash and buy something else in the future that I think is undervalued. And I got in at a pretty good price that I'm comfortable with, and I'm happy to hold this stock because I think it's very stable. I've talked about it extensively. I think it's very inflation proof, and I just think it's a great company. So that was kind of my thesis in buying American Express and Energy Transfer. Let me know what you guys think, if you think this was a smart buy or not. I really think that these are good companies too, because they're decent growth. They're very reliable. You don't really have to think about them a lot. And when they go low, those are the type of stocks I like to buy. I don't want anything speculative. I don't want anything that, I'm worried about my money disappearing in. I want something that I know is pretty reliably going to increase in value over time. And I think that American Express and Energy Transfer are both going to increase over time for different reasons. Obviously, I think American Express is probably as high of quality as you can get, very boring, very safe, but also doesn't really dip like this very often. So when I have the chance to get in, I'm going to get in. And Energy Transfer, I just think is plain undervalued and has a very attractive dividend that I enjoy collecting. So I'm going to increase my dividend amount when I think that the stock is undervalued, and that's what I did today. So let me know what you guys think in the comments section down below, if you would buy these stocks, if what stocks you were looking at, what you think about the dip today, if you think it's going to be a long-term thing, if you think it's going to be a short-term thing. I'm really interested to hear what you guys have to say. Thanks for watching this far. If you haven't subscribed already, please hit the subscribe button. I appreciate all my subscribers. I think we have one of the best communities on YouTube. I really do. Thank you so much. Bye.